What does the future have in store? An endless bull market? Or more volatility? That's what some are beginning to question. The sheer magnitude of the possibility of the debt bubble collapsing is unimaginable. It would cause a shockwave felt all around the world. There will be no escape from the madness that will ensue. The question is, are you ready? You came here for the truth, so let me unveil that for you. Today we're going to look at what has happened in the stock market. This is a continuation of the previous video I had done. I'm not going to show you all the same things I did earlier today. This is some other information that I believe is important to look at, so let's begin. US stocks decline on tech woes, dollar rallies, markets wrap. This shows us what has happened today. I've covered a lot of the details in the previous video, so I won't touch on that, but just wanted to tell you that last week was mostly positive. You saw Friday starting to look weak, and then of course Monday was quite terrible, and that's shown right here. Tech trouble. The Nasdaq 100 is down more than 10% since the beginning of October, and that puts it officially into correction territory. So this shows us 2 trading days, Friday and Monday. That would be the 9th and the 12th. And it was just punished between these 2 days alone, 3.64% here. And that's led by Apple. This has been the case where you saw all of these tech stocks starting to look quite weak after rallying for month after month after month after month. And then January happened. Things started to tumble. Things started to get all out of order. Then we saw the portfolios getting rebalanced and reallocated. And things really changed. But now today, we have some very wild and wacky things occurring. Could it be possible that the FANG stocks will not be able to grow forever? Well, that's what a lot of people are starting to ask. Even Jim Cramer, if you can believe it or not. I'll show you that in just a second. This is the different charts, the US markets. I like to show this because it really tells us what we can expect in the coming days and weeks. This is the Dow Jones in the top left corner, then the S&P 500, the Nasdaq, and the Russell. So we could see that some of them are still below their 200-day moving average, and it looks like the weakness is truly here, truly present throughout all of these markets regardless. All right, so when you're down in 3 out of the 4 below that 200-day moving average and all the rest, it's not a good thing, because that tells us that we don't have that growth potential that they are always needing. But why? Because, of course, the Federal Reserve has begun to dry up liquidity, and that has caused a very, very big problem. FANG Plus Index, you could see that throughout October and into November, it has looked quite weak here. This came from a very high level, of course, but the general consensus prior to October was that if you didn't know what to invest in, just put your money in FANG stocks and you have a guaranteed win. Maybe not every single day, but that's the general idea. That kind of talk is not from investors, but that is for speculators. And sometimes they get bit in the behind. Oil falls in the longest losing streak on record. So we have this constantly happening where I've covered the issues that have been going on with oil. Look, if I put this at the peak, 85, 83, and now today sitting at under $70 a barrel. So by the time you're watching this video, perhaps it has risen. This is Brent crude, by the way. And if you look at WTI, this has actually gone below $60 a barrel. So that shows us that we have been in a bear market now with oil after reaching quite a high that it hadn't been at in a significant period of time, a few years in fact. So this is not looking good for those jobs surrounding oil. Of course, when you see this happening, these companies start to not open up new discoveries. The wells don't get opened. You start to see individuals getting laid off from their positions. You see the companies stopping their hiring process altogether. Then when the layoffs really kick in, you see that affecting the economy surrounding those areas connected to oil. Some of these towns are just oil, oil, and oil. They're just surrounded by that. And when the jobs start to go away, the people start to sell their homes, the values plummet. You see the businesses, the food, and everything else connected in with that start to suffer as well. This isn't good, and we saw what happened in previous instances, and that's a volatile place to be. I didn't make this article up, if you can believe it or not. CNBC's Jim Cramer says the stock market is in a very serious correction, and there's nowhere to hide. Jim Bear Stearns Cramer actually said a very serious correction. He didn't tell everybody to go out there and buy FANG stocks, but what he did say was this: the economy is solid and has championed the idea of the Fed's pausing or at least slowing down the interest rate raising initiative to assess the current market conditions. That's ridiculous. We've had nearly 10 years of ultra low interest rates. You had enough time. You had enough time to fix the problems. But of course, they're not going to be fixed. They never were in the previous bull market. They never were in the previous bear market. Why in the world would they be fixed today? There's more details in there about that, but I just wanted to show you one last thing. You're looking at the European markets. Two that are very important, of course, are the German market as well as the Italian market. Both of them down more than 1% in the previous trading session on the 12th of November. And that doesn't look good for what's coming. There's so much turmoil going on right now in Europe, especially with what's happening in Italy. I was just reading an article that basically said, look, if we don't just say screw you to the EU and put this budget through as our own budget, then we're hurting our own people. So either we hurt our own people or we hurt these technocratic elite. And it seems like they're just going to go ahead with their own plan, which of course is good. I think that they should basically say, see you later to the euro, deal with their own currency, and not have to deal with this business that they've been trying to cope with. It doesn't work for Italy. Maybe it works for Germany. Maybe it works for a couple of countries, but having all of these countries together like this, clearly it's not working. It's just not working. Whether you have a solution to that or not, that, well, if they did this or did that, and maybe it would work. Right now, it's not working. Since 1999, I think the situation has just gotten worse and worse and worse. It's not getting better. And, we will have more crises in the future, and that's only going to make matters worse. But what it is going to do is going to enrich those who are in control. They will gain the power. They will gain the monetary incentives that they have always been getting for years and years, and it's just going to continue on. So I'll leave it there. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, well then these two books have it all. I talk about everything from the foundation to the asset classes. Everything you need to know is covered in these two books. Check them out at the link in the description. And if you're more interested in the audiobook version, you can get that at themoneygps.com.